Joining us now is the keynote speaker here at Gold Stock Analyst Investor Day. He's also the manager of the $1 billion Tocqueville Gold Fund. John Hathaway, thanks so much for being with us on the program. So I just got out of hearing your speech right here. So welcome to the conference, welcome to the show. Let's talk about the case for gold. You know, we've seen the rally since really the start of the year. You know, it's fluctuating between being up 12 to 15% so far this year. What's the case for the metal?
Well, the real case, the long-term case, is the loss of faith in paper money. And I think anybody who invests in gold and is not a trader, which there are some of us who are that way, feel that the long-term decline of the purchasing power of the dollar and other paper currencies is the principal reason for owning gold. There are side effects of that, which could be disruptive to the financial markets, which could generate more interest than there is right now in the metal. And that's what I think would cause money to pour in a big way.
You said even if gold were to go to 1,500 this year, you expect gold production to decline.
I would say that if gold prices stay in a range of, say, 1,200 to 1,500 for the next 3 years, I think it's baked in the cake. Exploration is way down. There haven't been any significant discoveries. The time to build a gold mine keeps getting longer. It's a riskier proposition. And you know, reserves are down to the lowest level. Reserve lives, I think, are down to the lowest level in 30 years. So we're kind of winding down the clock in terms of production. And you just don't crank this up like a muscle car. I mean, you just don't feed it money and suddenly you have production. So that's why I'd say by 2020, I think even if gold were to sort of go to, I think if it stayed short of, say, 1,900, which was the all-time high, I still think we would be at best flat and maybe down.
So you have about 15% physical gold allocated in your fund. If gold were to continue its rally, would you look at increasing that?
Actually, we look at our physical gold position as being kind of an anchor of value for the fund. And we own physical, we don't own the ETF. If the gold price were to continue to rally, I would expect better performance from the mining stocks. And therefore, we probably wouldn't add to the gold position at that time. We did add on the down, as the gold price went down. But if the opposite turns out to be the case, we probably would put more new money into mining stocks as opposed to the physical metal.
I want to pick up something else that you recently said. You said there's an acute shortage of physical gold caused by the dumping of paper gold contracts in the West. You say you expect this shortage to deepen in the years to come. Why is that, and what would this mean for the price?
Okay, let's take a look at what's been going on as far as the flows of physical metal. I mean, you know, you always hear that all the gold that's ever been mined is above ground. Well, that to me is just complete hogwash, because it's not in readily marketable form. It may be above ground, but it's somewhere that you can't get it. So the available amount of gold to feed investor demand is much less than people think, and especially since in the last 3 or 4 years, with paper gold driving the price down, it's all been going out to Asia. It's going to India, it's going to Turkey, it's going to the Middle East, and it's going to China. That gold gets refined into different bar shapes, different levels of purity. You just can't bring it back to the London or the New York market and expect to trade it without a delay, in some cases very substantial. And here's another thing to think about. If the gold price continues to go up and then money starts to flow into the ETF, let's take GLD as an example, but the others are the same, they must buy physical gold. That's their mandate, that's their requirement, it's in their charter. And if that gold is hard to find, which I think it is, I think it's harder to find than it was 3 or 4 years ago, that's going to drive the price in a much bigger way than I think most people expect.
Why do you think it's harder to find? Just because exploration's down?
It's not there. Oh, it's harder to find. It's harder to find physical gold in vaults in London. It's just, there's less of it, much less of it.
You know, you mentioned that as an example of hogwash that you've heard in the industry. Right. You know, there's a lot of theories circulating in our industry. Is there anything else that when you hear it, you say that's absolutely false?
A lot of it, probably 90% of it.
What's an example? Another example?
Well, one thing that drives me crazy is the idea that the dollar and gold are inversely related.
Okay.
If you do any sort of correlation, which we've done, you'll see that the explanation of the gold price by the dollar itself is very weak. It's just a convenient myth that high-frequency traders, COMEX traders use to justify a long or a short position in the gold price.
All right, John, final thoughts for investors watching. I know a lot of people are watching this interview. Love hearing from you. What are your thoughts to them? It
feels to me, knock on wood, that we've turned the corner. It's been like 4.5 years of, particularly the last couple of years, have been really, really tough, and I've been right in the middle of it, so I know what it feels like. But the long-term thesis was always the same and hasn't changed. And so I kind of feel like we're sort of beginning to see some daylight here. And you know, time will tell, and I'm not a trader and I don't look at short-term stuff, but it seems to me that we are maybe at the beginning of a loss of faith in public policy, for monetary policy, fiscal policy, politicians. This experimentation that they have, you know, I feel like a lab rat, you know, with 0 interest rates and no return on my savings account, and now they're going to take away my $100 bills and things like that. I'm just, you know, we're just lab rats out there for these college professors to make us behave differently.
John Hathaway, thanks so much for joining us today. And we'll have more for you from Gold Stock Analyst Investor Day. Be sure to stay tuned. Thanks.